You could argue that there is a realization by countries and very powerful countries that aren't afraid to stand up to the COMEX. They aren't afraid to stand up to the LBMA or to the West for that matter. They understand what we've been doing and they're beating us at our own game. It will happen. It will happen in a glorious, spectacular fashion. It will test your patience. But when it snaps, it will snap in a way that you finally will understand why you had such strong fingertips, that your intuition led you in the right direction.
You're watching Silver News Daily. Subscribe for more.
Silver is standing on the edge of a financial explosion, and almost no one is prepared for what comes next. Andy Schectman has just made one of the most shocking predictions in the history of precious metals: silver soaring to an unthinkable $5,000 an ounce, and gold shattering $10,000. It sounds extreme, but when you connect the dots, it becomes impossible to ignore. The global economy is unraveling. Inflation is running out of control, and central banks are backed into a corner. Every time in history that we've seen this kind of crisis unfold, silver hasn't just risen. It has erupted, delivering once-in-a-lifetime gains to those who saw it coming. But this time, the setup is even more dramatic. The banking system is cracking, supply chains are in chaos, and central banks are stockpiling gold like never before. Silver, the most overlooked asset in the financial world, is about to reassert itself as the ultimate safe haven. The only question left is, will you act before the masses wake up? By the end of this discussion, you'll understand exactly why silver's path to 5,000 isn't just a wild theory. It's a reality waiting to unfold. But time is running out, and those who hesitate may find themselves left behind as the biggest silver frenzy in history takes off.
How do you like that? I mean, more than the Fed. So this is a guy who's the value investor, loaded with cash and treasuries. He doesn't see much in the way of value, or is he waiting for something that will enable him to come in and scoop things up on a value basis? And as Blythe Masters said many times, JP Morgan doesn't buy gold for their house account, it's for clients. Okay, well, if that's the case, who's got $4 billion that they delivered in gold to COMEX in February? Who's got that? Could it be Warren Buffett? Maybe. I mean, seems like a good value to me. There's all sorts of supposition who that is, who those clients are, who took that delivery. One of the things that's important to note is that a lot of the metal hasn't left COMEX yet. Some has, a good amount. But when it's delivered into the eligible account, someone like we have one of our Brinks facilities is in New York, JFK. That is a COMEX facility. And all of our clients' metal, gold and silver, is held in what's called eligible category. It means it could be sold on COMEX if you move it to registered. We've seen a massive increase in the registered category, which tells me that there are entities standing for delivery. You don't do that unless someone says, we're going to take, we took the other side of your short contract, JP Morgan, we took the long, we're standing for delivery. So they have to first move it into eligible and then transfer it to registered. And that's what we've seen. But so, something's going on. Then again, something's going on. And we have seen a lot of offtake, but the deliveries, as I mentioned, last month, we saw the largest delivery in the history of the COMEX, right? 16 million ounces, 5.9 million ounces of gold, almost 6 million. Was taken, the largest delivery ever in the history of the COMEX market for a 1 month contract. Something's going on, and I think people need to pay attention to it.
For years, the cracks in the global financial system have been papered over with endless money printing, reckless government spending, and artificially low interest rates. But now the illusion is shattering. Inflation is raging, the cost of living is spiraling out of control, and confidence in fiat currencies is eroding at an alarming rate. The very foundation of the economy is built on debt that can never be repaid, and the only thing keeping the system afloat is blind faith. But faith alone won't stop the inevitable collapse. Investors around the world are beginning to panic. Central banks have been propping up markets with cheap money for years, but now they're trapped. If they raise interest rates too high, they risk triggering a devastating recession. If they cut rates, they unleash even higher inflation. Either way, the purchasing power of the dollar continues to erode, and once that confidence is lost, there is no going back. The writing is on the wall. The global economy is teetering on the edge of something catastrophic. And this is exactly where silver enters the picture. History has shown that when economic turmoil hits, silver isn't just a hedge, it becomes a lifeline. During times of monetary crisis, when paper assets crumble, silver has always emerged as one of the biggest winners. The question isn't whether silver will rise, it's how high, how fast, and who will be holding it when the dust settles. We're witnessing the beginning of a global financial reset, and those who don't see what's coming are in for a rude awakening. But those who understand silver's true role in protecting wealth, they're preparing for what's next. And if you think this crisis is bad now, just wait until you see what's coming next. The Federal Reserve is walking into a trap, and their next move could be the biggest catalyst for silver yet. Stay with me.
Have been conditioned to expecting the floor to drop out once it corrects, like we saw a few days ago. And here we are right back pretty darn close to where we were when before the correction. Today, gold is at, where are we at today? Let me just double check here. So we got gold up $22 right now to 29.20. Silver up just a little bit, just a tick or two at 31.82. Climbing back to where it was. The resilience is a very good word, but really what to me is very different. Again, as we've been talking about now for the better part of a month, is that traders on COMEX are no longer rolling over their contracts. Many of them aren't, and that's really the difference. That's what enables this rehypothecated system to continue, because we don't stand for delivery, so we just keep rolling it over. It's a cash settlement, it's a speculation, or it's a hedge, but standing for delivery was something that never happened. And we started talking about this in 2020. I guess I'd rather be 5 years early than, 5 seconds late. And we were talking about how there was a slow bleed down of inventory and deliveries happening at an accelerated pace, which was really unusual at that point, like an outlier. Well, not so much anymore. In fact, contracts standing for delivery have led to an open interest surge of over 750%. Open interest meaning those that are standing for delivery. I guess to me, this raises the question, why are the traders in the nation states and the central banks suddenly standing for delivery? That should be something people are asking themselves. The folks that are standing for delivery are not something to be dismissed. These are very sophisticated traders. And at the same time, another strange occurrence is that the net long position on COMEX is rising rapidly, while the short position is at its lowest since 2020. So being naked short right now when everyone is standing for delivery is akin to a mud wall in a rainstorm. Stupid, to say the least. We talked a lot about the contracts that stood for delivery last month. 15,691 contracts stood for delivery, 78.5 million ounces, second highest in COMEX history. Another 4.6 million ounces of silver was taken for delivery on Friday, this last Friday, bringing the 20-day total to 41.2 million ounces. That's 4 times higher, at least, than any previous year in silver. COMEX delivered 50 million ounces of silver on the first day March deliveries. But where is the media talking about any of this? Do you hear them? I don't.
The Federal Reserve is trapped in a no-win scenario, and the consequences of their next move could send silver into a parabolic surge. For over a decade, the Fed has kept interest rates artificially low, flooding the system with cheap money, inflating massive bubbles in stocks, bonds, and real estate. But now, inflation is out of control, and they're scrambling to regain control. The problem? They can't fix this without breaking everything. If the Fed continues hiking interest rates, debt markets will buckle under the pressure. The U.S. government alone is drowning in over $34 trillion of debt. Every rate hike makes that burden heavier, pushing the financial system closer to collapse. Banks, corporations, and even entire countries are reliant on low-interest money to survive. A tightening cycle could trigger a full-scale liquidity crisis, forcing investors to flee into hard assets like gold and silver. But what if they pivot? What if the Federal Reserve, under pressure from Wall Street and the White House, reverses course and starts cutting rates again? That would unleash a new wave of inflation, sending the US dollar into a downward spiral. And this is where things get dangerous. Historically, when fiat currencies start to unravel, precious metals go absolutely vertical. The 1970s inflation crisis saw silver rocket nearly 3,700% from under $2 to almost 50. The 2008 financial crisis and the Fed's reckless money printing pushed silver from $9 to $49 in just 3 years. And today, the setup is even bigger. No matter what the Fed does next, whether they tighten and crash the system or print and destroy the currency, the outcome is the same: a massive rush into silver. The market is still asleep, but the moment reality sets in, silver's move will be swift, violent, and life-changing for those who are positioned early. And here's the kicker: silver isn't just rising because of monetary chaos. There's another force at play, one that's making silver more critical than ever before. The biggest industrial boom in history is about to collide with the tightest silver supply we've ever seen. And when that happens, prices could go parabolic. Stay with me.
Out of Bitcoin. Bitcoin, it's interesting. It's almost like a retail trap. They announced the crypto fund, and crypto's gotten killed since the last 2 days since that came out. It's like the old adage, buy the rumor, sell the news. I found it interesting that the Atlanta Fed has revised downward their GDP expectations to negative 2.8% from 4% a month ago. Trump's going to get blamed for this, but they're saying growth is now going to be negative by almost 3% instead of positive 4%. That's not good. So these are the things that I think, at least from a standpoint of what I see happening, biggest money in the world is standing for delivery and rushing to get gold. London doesn't want to let go of the gold because it's massively rehypothecated. And the markets are massively overvalued. At the same time, every single metric that speaks of recession is screaming, we're here, the uninversion of the yield curve, the record amount of money in money markets, the unemployment numbers going higher, the Claudia Sahm rule, all of these things have been triggered, and yet, I guess the way that they calculate a recession has changed so that we're not really in a recession yet. To me, it seems that we are very much so in a recession. We're seeing massive layoffs. And when you realize that government spending accounts for, 30% of GDP, when you're laying off all of these government employees and trimming the government spending, the fraud that was our GDP, it just seems that we're moving into a very dangerous time. I would call it high probability of stagflation. Inflation ain't going away. It's only getting higher, going higher. And at the same time, the prospect for economic growth, Atlanta Fed is telling you, is negative 2.5%, almost 3%. That's not good. That's stagflation. And that seems to me where we are going. But on another note, it just seems that big money is preparing for something that's coming, a massive shift into gold, a massive and silver, and grabbing it, taking possession, getting it out of the harm's way, while the insiders are dumping stocks and the public has rushed into it and into crypto. Is it a trap? Don't know. Kind of looks like it right now, but the world changes so fast. It's hard to tell one day to the next. But I would say that this is not a time to be a speculator, and the insiders, the big money, is telling you that.
Silver isn't just money, it's a critical industrial metal, and right now, demand is exploding at a speed the market simply isn't prepared for. The world is undergoing a historic transformation. Solar power, electric vehicles, AI computing, and 5G technology are reshaping the global economy. And at the center of all of it, silver. Let's start with the solar industry. Silver is an essential component in photovoltaic cells, the key technology behind solar panels. Unlike other metals, silver has no viable substitute for conducting electricity at the efficiency levels needed for modern solar technology. Governments around the world are pouring trillions into green energy, with mandates for net zero carbon emissions driving solar panel production into overdrive. In 2023, solar panel manufacturers used over 140 million ounces of silver. But by 2030, that number is projected to skyrocket. And here's the problem. The silver supply isn't keeping up. Now add the electric vehicle, EV revolution. Every single EV requires 2 to 3 times more silver than a traditional gas-powered car. As automakers ramp up production to meet government-mandated emission targets, silver demand in the auto sector is expected to hit 120 million ounces per year, an all-time high. And that's just EVs. The global rollout of 5G networks, AI-powered computing, and the increasing demand for high-performance electronics all require silver. Here's where it gets dangerous. Silver supply is shrinking, not growing. Unlike gold, which is mostly recycled and stored, silver is constantly consumed. The world has been running a silver deficit for years, meaning we're using far more than we're mining. With demand surging and supply tightening, a major supply crunch is brewing. And when investors finally realize just how scarce silver has become, the price surge could be unprecedented. So now we have a perfect storm. Silver demand is rising faster than ever, supply is dwindling, and central banks are pushing the financial system to the breaking point. But there's one more piece of the puzzle. Something that could send silver skyrocketing at speeds no one expects. The gold-to-silver ratio is flashing a massive signal, and it's one every serious investor should be paying attention to. Stay with me.
Family offices. This could be a proxy for the PBOC. It could be a proxy for Saudi Arabia. We don't know who they are. A proxy for India, a proxy bank, or a proxy sovereign wealth fund, or a big family office that's set up here in North America and standing for delivery over the Globex. These are very unusual things, and people should be paying very close attention that these kind of players don't take 17.5 million ounces of silver just for the hell of it. This is way outside the norm. We've seen the same thing in gold with February contract. Same thing, massive delivery from bullion banks to non-bullion banks. Well, who are they? They're the others, that group, the others we talked about. Not really sure who they are, but we know that they're not bullion banks, but they're wealthy and sophisticated as hell. And that lends to conspiracy. Who could it be? Big money, to say the least. I would argue that, some people would say it's Fed proxy bullion banks are probably the biggest buyers. So, even the banks on behalf of the Federal Reserve, and they say proxy so that they're set up in a different way. A family office, a sovereign wealth fund, as I mentioned, some sort of a fund, a hedge fund, doing it on behalf of the Fed, could they? Or maybe on behalf of other entities. China, CTA, commodity trading advisors, are following suit. This is continuing to happen. Now, let's talk about, at the same time, what's happening in the marketplace. Kind of caught my attention, and of course, I'll take any questions. These are just things that have caught my attention. The VIX on the stock exchange has moved up, surged above 20 for the 6th straight day. Since February 14th, the VIX is now up 45%. So you're seeing great volatility, not only in the crypto market, but also in the S&P. I find it interesting that hedge fund exposure to the Mag 7 is at a 22-month low. So all of these people that have been driven into the Trump trade, the risk-on trade, the AI trade, the hedge funds, again, the big money, it's at a 22-month low. We've talked about the insider selling, NVIDIA shares selling, Jamie Dimon selling, Bezos selling, Zuckerberg selling, 7-to-1 insider selling versus buying the hedge funds at a 2-year low. And yet all of this money that has ridden this up, what does that tell you for where it could potentially go when the big guys are leaving? And institutional capital is moving from risk on to risk off all of a sudden into gold.
For decades, the silver market has been heavily manipulated by big banks, keeping prices artificially low. This isn't speculation. It's been proven. Major financial institutions, including JP Morgan Chase, have been caught red-handed, accused of using illegal tactics like spoofing and naked short selling to suppress silver prices. And now the cracks in their control are beginning to show. Here's how it works. Banks have been shorting silver in the futures market, meaning they bet on lower prices. But they're doing this without actually holding the physical silver. This creates an illusion of supply, driving prices down and shaking weak hands out of the market. But the problem? This only works as long as there's enough silver to go around. And right now, that's no longer the case. Silver inventories on major exchanges like the COMEX and London Bullion Market Association, LBMA, are drying up. Over the last few years, we've seen a massive drawdown in available silver stocks, with registered inventories falling to some of the lowest levels in history. At the same time, central banks and wealthy investors are quietly accumulating physical silver, pulling it out of the system. When the supply squeeze reaches its breaking point, the paper silver market could collapse. And when that happens, the price could move violently higher overnight. We've already seen glimpses of this. In early 2021, during the Wall Street Bets short squeeze frenzy, retail investors attempted to break silver price suppression, driving the price up nearly 20% in just a few days before banks stepped in to regain control. But that was just a preview of what's coming. When the real short squeeze hits, silver won't just rise, it will skyrocket. The same institutions that have been suppressing silver are now scrambling to cover their positions. If silver breaks key resistance levels, banks could be forced into a massive short covering event, sending prices soaring in a matter of days. And the best part? Most investors have no idea this is happening. They're still asleep, still believing silver is just another commodity. But those who understand the game being played behind the scenes, they know that when manipulation finally fails, silver's true price will be revealed, and it won't be anywhere near today's levels. But the real panic hasn't even started yet. The moment that fear grips the markets and investors start rushing into silver for protection, we could see an unprecedented surge in demand. And when that moment arrives, most people will be too late. So what happens when the world suddenly realizes that silver isn't just an investment? It's a necessity for survival? Stay with me.
You and I do, and folks on your channel do. This is monumental. This is the same kind of environment where, why didn't the media tell us gold was reclassified as tier 1? The important things they're not telling us. Since December 2024, over 600 tons or over 20 million ounces have been moved into the vaults in New York City. This is an anomaly for sure. I find it interesting. We've seen 28 million ounces shipped from London since mid-December, yet now they say it's a T+8 week exchange instead of T+1 day, as it's supposed to be. And the question would be, if they were able to send 28 million ounces of gold since December of 2024, why all of a sudden are there delays of manpower and of trucks? It speaks more to me of a default than anything else. And we've talked at length about the massive amount of naked shorting in London, which amounts to 90% of all the trades are paper. And so, you have to wonder, is this targeting the Bank of England? Is this targeting the LBMA? Is it not as germane? Is it not as, a lot of people say, no, none of that stuff is, it's taking advantage of arbitrage. It's bringing gold home because there are people afraid of war in Europe. It's the Trump tariffs. It's, it's the Basel III. Maybe some of that is true, but could it be more? I don't know, but it just, the spidey sense tells me it's something more. But it appears that the London market for the past 2 months has been tapped out of bars, and they're trying to scurry to get more to deliver, or they're pausing because they're afraid that that's what ultimately will happen, kind of like Nixon did when he closed the gold window, figuring they're going to take all the gold, and then what? One thing that I found very interesting is the trend of bullion banks versus non-bullion banks. So the bullion banks being JP and Citi and Bank of America and Goldman. These are the commercial banks that are the major traders in bullion. 17.5 million ounces of silver was transferred from bullion banks to non-bullion banks here just a few days ago, making it one of the largest transfers in COMEX history, but going to sovereign wealth funds,
For decades, the silver market has been heavily manipulated by big banks, keeping prices artificially low. This isn't speculation. It's been proven. Major financial institutions, including JP Morgan Chase, have been caught red-handed, accused of using illegal tactics like spoofing and naked short selling to suppress silver prices. And now the cracks in their control are beginning to show. Here's how it works. Banks have been shorting silver in the futures market, meaning they bet on lower prices. But they're doing this without actually holding the physical silver. This creates an illusion of supply, driving prices down and shaking weak hands out of the market. But the problem? This only works as long as there's enough silver to go around. And right now, that's no longer the case. Silver inventories on major exchanges like the COMEX and London Bullion Market Association, LBMA, are drying up. Over the last few years, we've seen a massive drawdown in available silver stocks, with registered inventories falling to some of the lowest levels in history. At the same time, central banks and wealthy investors are quietly accumulating physical silver, pulling it out of the system. When the supply squeeze reaches its breaking point, the paper silver market could collapse. And when that happens, the price could move violently higher overnight. We've already seen glimpses of this. In early 2021, during the Wall Street Bets short squeeze frenzy, retail investors attempted to break silver price suppression, driving the price up nearly 20% in just a few days before banks stepped in to regain control. But that was just a preview of what's coming. When the real short squeeze hits, silver won't just rise, it will skyrocket. The same institutions that have been suppressing silver are now scrambling to cover their positions. If silver breaks key resistance levels, banks could be forced into a massive short covering event, sending prices soaring in a matter of days. And the best part? Most investors have no idea this is happening. They're still asleep, still believing silver is just another commodity. But those who understand the game being played behind the scenes, they know that when manipulation finally fails, silver's true price will be revealed, and it won't be anywhere near today's levels. But the real panic hasn't even started yet. The moment that fear grips the markets and investors start rushing into silver for protection, we could see an unprecedented surge in demand. And when that moment arrives, most people will be too late. So what happens when the world suddenly realizes that silver isn't just an investment, it's a necessity for survival? Stay with me.
Since they announced the strategic account, Bitcoin's down $900 today, but over the past, let's see if I can do this into 3 days. Well, it's straight down over the past few days since they announced it. I don't know what it means. It just seems like it was a retail trap. All of the ones that they mentioned, XRP, Cardano, or I don't even know the names of them all, but they're all way down since it was announced. And the same thing is true here about the S&P. And you got, the hedge funds at their lowest exposure to the Mag 7 in 22 months, yet everyone you talk to who's in stocks, they're in the Mag 7. What does that really tell us? And yet you hear nothing about gold and silver, but if you're paying attention, you see there is a mad dash for it, a quiet mad dash that no one in the mainstream talks about. And your very well-read, articulate, financially literate friends have no idea. That's the scary thing. You can see that there is a concerted misdirection effort to the public. And sometimes you look at the comments, yeah, these guys have been saying this shit forever. Well, okay, we have. But at some point, the logic and the reality of it plays out. It's a high-stakes game, no question about it. But I will tell you that in my entire career, Dunnigan, it has never felt like it does right now. Something's brewing with gold and silver, big. And you can see they're fighting it. They're not letting it easily get away from them. But there are forces that are not bullion banks that are challenging the bullion banks, standing for delivery. And these proxies, whoever they are, these sovereign wealth funds, are a formidable foe, to say the least. And I think to be naked short right now is insane. And maybe that's why you see the short position on COMEX the lowest it's been since 2020. And maybe will continue to go lower. And maybe that's part of the reason we're seeing the gold come back. But if you are naked short and you need to deliver and the LBMA says, sorry, 8 weeks, what do? Where do you get the gold? This is how the whole thing can blow up. A lot of people think it won't, that the exchange will do something that they need to do to save themselves. But what if it happens in the LBMA? Are they doing that to save themselves right now? 8 weeks, cooling off? It's supposed to be T+1. How aggravated would you be if you had millions of dollars worth of gold that you were expecting for something, whether it be to cover a position or manufacturing jewelry or whatever it is, and you were told, sorry, it's 2 months minimum before you get it because we don't have enough trucks and enough manpower, which is a joke. So I don't know. It's bigger than what a lot of even the people in this industry who kind of lean to the conservative side, not as stupid as I am to say these things, maybe.
Imagine this. The financial system is unraveling, the stock market is in free fall, and inflation is devouring savings at an uncontrollable pace. Panic sets in. Investors, institutions, and even governments start scrambling for real assets. Not paper promises, not digital dollars, but something tangible, something with intrinsic value. And when that moment hits, silver will be at the center of the storm. We've seen glimpses of what happens when fear grips the markets. In 2008, as the financial crisis deepened, silver went from $9 to nearly $50 in just 3 years. In 2020, when uncertainty spiked during the global health crisis, silver rocketed 140% in just months. But here's what's different today. The setup is far more extreme. Unlike previous financial crises, we're now dealing with a global de-dollarization movement, growing distrust in the banking system, and an inflation crisis that central banks can't seem to control. And the problem? There isn't enough silver to meet the coming demand surge. Let's look at the numbers. The U.S. Mint recently admitted to a severe shortage of silver blanks, forcing them to ration Silver Eagle coin production. The COMEX, one of the largest silver trading hubs in the world, has seen its registered silver inventories dwindle to dangerously low levels. And at the same time, industrial silver demand is reaching record highs, squeezing supply even further. So what happens when the masses finally wake up? When the financial system cracks and millions of people rush to buy silver at the same time? The price won't just climb, it will explode. Retail shortages will appear almost overnight. Premiums on physical silver will skyrocket. And those who waited on the sidelines, hoping to time the market, will be left watching silver become unaffordable. It's a scenario we've seen before. In 1980, silver's price surge led to complete shortages, with investors desperately trying to buy at any price. In 2011, silver dealers saw record-breaking demand, forcing them to raise premiums and limit orders. Now in 2025, with more demand pressure than ever before, the coming silver panic could make past shortages look insignificant. And here's the most important part. The silver panic won't just be driven by investors. It will be driven by institutions, corporations, and even governments looking for protection. When that happens, the window of opportunity slams shut. But while the public remains distracted, the elite are already making their moves. Central banks are stockpiling gold at a record pace. Billionaires are quietly accumulating hard assets. They know what's coming, and they aren't waiting for the headlines to confirm it. So the real question is, will you be ahead of the panic, or will you be one of the people desperately trying to buy silver when it's too late? And here's the key. Silver's coming explosion isn't just about fear. There's a much bigger force at play. One that is pushing silver into a once-in-a-century breakout. Stay with me.
So anything, they don't have profit motive. And if you don't have profit motive, you do stupid things because you don't care. Well, let's just buy this and spend that and do this. It's not our money. We don't care about profit. It's the profit motive of the private sector. That is what you talk about when you talk about, free market capitalism, where the market itself is the purest form of integrity and it's just the purest way to see growth and removing excess and waste, which is the opposite of what we've seen just from what Doge has uncovered. But the waste and the fraud is extreme because of the lack of profit motive. When you own a business and your life depends on it, you're very cognizant of what you spend and what you take in your balance sheet, right? It's the opposite with the government, and the mismanagement of it is put us in a very precarious position. I mentioned on your show last time, just so people should understand this. Look, we should all be very thankful that the administration is doing what they're doing, but it doesn't matter what they're doing. There's going to be that moment that we have to deal with at some point. We have $28 trillion in Treasury debt comes due in 3 years. In 3 years, if we take in what is expected, and this would be on the high end, that's $15 trillion in tax revenue, $5 trillion a year. And he wants to reduce taxes, so that might even be less, but let's call it $15 trillion. That means you're halfway there to what you owe in coming due bonds, which doesn't take into account to this year, the next year, and the next year in spending, deficit spending. We're $900 billion plus in the hole, and it's just the beginning of March for this year. So mathematically, this has become an issue of math. And maybe this is why you're seeing the biggest money in the world run to gold and silver. Now, I have Natalie Brunell on my show today, and she's pretty much the Bitcoin queen in this country. And I want to ask her tough questions. I respect her. I respect Mark Moss. I've had a lot of conversations with both of them about Bitcoin. I don't know what to feel about it. I don't. I mean, I don't think it is a long-term value play or a long-term store of value. I think it's something that can make you very wealthy and will stick around. But the volatility where it can fall 20 and 30% in just a couple of days is very concerning. And when you take a look at, let's see what it's doing today, I don't know. But since
While fear and financial chaos will drive silver demand through the roof, there's another force at play, one that makes this setup even more explosive. Silver isn't just a crisis hedge anymore. It's a necessity for the future. We are living through the most resource-intensive technological revolution in history. Green energy, artificial intelligence, electric vehicles, 5G infrastructure, all of these industries are hungry for silver, and demand is surging at an unprecedented rate. Unlike gold, which is primarily used as a store of value, silver has a dual purpose. It's both a monetary metal and an industrial necessity, and that's what makes this moment so unique. Silver is being drained from the market at both ends. Let's look at the numbers. Solar energy boom. Governments worldwide are spending trillions to transition to clean energy, and silver is an irreplaceable component in solar panels. Solar manufacturers alone consumed over 140 million ounces of silver in 2023, and that demand is set to skyrocket as solar adoption accelerates. Electric vehicle revolution. Every EV requires 2 to 3 times more silver than a traditional gas-powered car. By 2030, silver demand in the auto industry is expected to hit 120 million ounces per year, a historic high. AI and 5G expansion. The push for faster data processing and higher connectivity means an explosion in silver demand for semiconductors, electrical circuits, and high-performance computing. And here's the big problem. The world doesn't have enough silver to meet this growing demand. Silver isn't just being bought by investors, it's being used up in manufacturing, never to return to the market. Unlike gold, which is hoarded and recycled, silver is consumed in electronics, solar panels, and medical applications. Once it's used, it's gone. This is why we're now seeing a historic supply deficit in the silver market. For the last 4 years in a row, the world has been consuming far more silver than is being mined. Global silver production is struggling to keep pace, with many major silver mines seeing declining output due to resource depletion and lack of new discoveries. And with supply chains already stretched thin, it won't take much for the entire market to reach a tipping point. This is why silver is different this time. It's not just an inflation hedge. It's not just a monetary metal. It's a critical resource, one that governments and corporations can't afford to run out of. And when industrial buyers are forced to compete with investors for what's left, silver's price won't just rise. It could break through all historical limits. But there's still one more wild card that could send silver into the stratosphere, and it has nothing to do with supply or demand. The global financial order itself is shifting, and silver could become one of the biggest beneficiaries of this transformation. Stay with me.
foolish, but I feel it. That's why I keep saying I don't know how it all plays out, but it doesn't feel just like a a normal arbitrage or a normal Trump tariff maneuver or even the Basel III thing. It just seems a lot deeper than that. I guess only time will tell. But, as far as retail, we've seen it begin to pick up. We've seen premiums start to slowly rise, availability start to slowly wane, slowly. Because for the last year, it's been the opposite of that. Premiums have been falling, availability has been increasing. Our inventory was never been so deep, but it's beginning to change. And we've seen some very large orders lately. We sold 11,000 ounces, we and you, of numismatic coins. And I will say to all of the people who took advantage of that, I have never seen a better opportunity. And you look at any of the other retailers out there, those of you that got the 63s and 4s and stuff, you'll see exactly what I mean. The prices are way higher than what you paid. And we sold it in a matter of days. So there are people who are beginning to understand what's happening in a very significant way. But I would argue, and give a name to this podcast, the big money is moving from risk on to risk off. At the same time, the public is deeply entrenched in the risk on trade. That, my friend, is something that I would not want to be part of because, as we've said before, the little man always is the last to learn. The big guys not only know the playbook, the information, but they position themselves way ahead of the trend. And you can see they are leaving these risk-on trades right now. When you see the hedge funds at a 22-month low on the Mag 7, what the hell are you sitting in these stocks for with profit? Get out. Profits, and that's not financial advice. That's what I would do. Profit's not a four-letter word. And at the same time, when you see none of the talking heads talking about gold and silver at all-time highs in gold, and yet the rush globally to accumulate and repatriate, what are you waiting for? I think something big is coming for gold and silver, bigger than ever before. Don't know what it is, don't know what the catalyst is, don't know how it plays out, but what we are seeing here in the periphery is so far removed from anything that I can even begin to tell you I've seen in 35 years that I would bet that we're all surprised how it all plays out somewhere this year, what the final numbers look like, where it ultimately goes, and who the players are that are involved in it. So only time will tell, but I don't say that stuff. Look, I don't say that stuff publicly on your show where a couple 100,000 people will watch it only to look like a fool. It is in my soul. That's what I feel.
A global financial reset is unfolding right before our eyes, and silver is about to play a critical role in what comes next. For decades, the US dollar has dominated the global economy, acting as the world's reserve currency. But that era is rapidly coming to an end. Nations around the world are moving away from the dollar, and when the dust settles, hard assets like gold and silver could become the foundation of a new monetary system. This isn't just speculation, it's already happening. Countries like China, Russia, India, and Saudi Arabia are openly challenging the dollar's supremacy, dumping US Treasury bonds and stockpiling gold at record levels. Central banks purchased over 1,000 metric tons of gold in 2023 alone, the highest amount in modern history. But here's the key. While gold is the primary asset for sovereign reserves, silver is its historical counterpart. If a new gold-backed financial system emerges, silver could once again be remonetized, skyrocketing in value as governments and institutions rush to secure physical supplies. And here's where things get even more serious. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been openly discussing creating their own trade system backed by hard assets. They've already launched a BRICS payment network to bypass the US-controlled SWIFT system, and discussions of a gold-backed BRICS currency are gaining traction. If such a system materializes, it would be one of the biggest financial shifts in modern history, and silver would be pulled along for the ride. This de-dollarization movement is accelerating for a simple reason. Trust in fiat currencies is collapsing. The US has printed over $8 trillion in new money since 2020, inflating away the purchasing power of every dollar in existence. Nations holding US debt are watching its value erode in real time, and they are actively seeking alternatives. Meanwhile, private investors are following the same path. Billionaires, hedge funds, And even pension funds are moving into real, hard assets, dumping paper wealth for tangible stores of value. We are entering an era where money will no longer be just numbers on a screen. It will need to be backed by something real. Silver has a long history of being money, and if the financial system shifts toward hard assets, silver's role could be redefined overnight. This is why today's artificially low prices are an illusion. Silver is being systematically undervalued while institutions prepare for what's coming. So where does that leave us? A global debt crisis, skyrocketing inflation, collapsing trust in fiat currencies, and an industrial silver shortage all converging at the same time. The result? A setup that could push silver to prices no one thought possible. And here's the most important part. The general public has no idea. The mainstream media isn't talking about this, and by the time they do, it will be too late. So what's the realistic path to silver hitting $5,000 an ounce? It's time to map out the final phase of this silver supercycle, because all the pieces are already in place. Stay with me.
Where that would happen, but never with the awareness or the economic backdrop we see right now. So, yeah, I've seen this before, and it doesn't take but a day or two of awareness from people, for whatever reason triggers it, where those back, that large inventory pool that dealers are sitting on, drowning on, losing money on, disappears. And you've been here with me long enough, you've seen it. This is why I tell, like my son who came on board a year ago, I said, listen, when you are selling something as a commission salesman, you're never as good as you think you are when business is great. You're never as bad as you think you are when business is slow. You have to learn that balance, that the market has movements to it that are repetitive. The only difference that I would see this time around is that they're far more accentuated. They're far more extreme, and the rationale is far stronger. And when you put into it the fact that we're now net importers of metal in this country and seeing 20 million ounces of gold that we know of imported here, and a rush to deliver record delivery numbers, record deposit numbers, and resilience, as you said at the onset, where they knock the price down and it comes right back up. That's been a hallmark of this market for the past several months. They knock it down, where before in my career, they would knock it down and beat the crap out of it and it would never come back. Like in 2011, which began a 5 or 6 year odyssey to the bottom. That ain't the case this time. So it's not going straight up, because there is certainly some pushback by those large institutions who are, fighting an existential threat for their livelihood by being stupid enough to be naked short all these years. But like I've always said on your show, the only way to manipulate a market over an extended period of time is to push it in the direction that it is going. So I always said that those same traders will find a way to flip-flop and screw to the nth degree the people on the other side. Those will be probably some of the American hedge funds who think they're smarter than the market. But I guess we'll see.
How does silver go from its current levels to $5,000 an ounce? It might sound extreme, but when you break it down, the path becomes shockingly clear. Every major silver bull run in history has followed the same pattern: undervaluation, financial chaos, industrial demand, and a supply squeeze. Right now, we are in the early stages of the biggest version of this cycle the world has ever seen. Let's lay it out step by step. The gold-silver ratio reverts. Historically, when gold surges, silver follows and outperforms. If gold reaches $10,000 an ounce, even a conservative reversion of the gold-to-silver ratio to 20.1 puts silver at $500 an ounce, but that's just the beginning. A physical shortage breaks the paper market. The current silver price is dictated by paper contracts in the futures market, not real supply and demand. But with silver inventories at historic lows, a physical shortage could obliterate the paper silver market, sending prices parabolic. Industrial demand spirals out of control. The world is facing an unstoppable technological boom. Green energy, electric vehicles, AI computing. Each of these sectors is consuming more silver than the market can supply. As governments enforce stricter climate policies, industrial buyers will be forced to compete with investors, driving silver to prices never seen before. The dollar's collapse accelerates. Global de-dollarization is picking up speed and central banks are abandoning the US dollar for hard assets. Once the public realizes fiat money is losing value rapidly, the rush into precious metals could push silver into hyperdrive, the ultimate short squeeze. Banks and hedge funds have been manipulating silver for decades, but they can't suppress the price forever. When silver breaks key resistance levels, short sellers will be forced to cover their positions, leading to a violent price spike, the kind that turns millionaires into billionaires overnight. Monetary revaluation of silver. If the financial system resets around hard assets, silver could be reintroduced as real money, just like it was for thousands of years. This alone would force a dramatic repricing, pushing silver into the thousands per ounce. Add all of these factors together, and $5,000 silver isn't just possible. It's the logical outcome of a market that has been artificially suppressed for decades. When silver breaks out, it won't be a slow climb. It will be a violent, unstoppable surge, shocking those who weren't paying attention. But when will this happen? Timing the breakout is the key. There are specific signals that could indicate when silver is ready to make its historic move. And if you wait until after it starts, you'll already be too late. Stay with me.
Yeah, I mean, we were all loaded, especially with since November, the Trump euphoria, people selling and taking advantage of the risk-on trade, the NVIDIA, the Bitcoin, et cetera. And then the 2025 allocations, where all the dealers and like, for example, we were able to buy backdate gold eagles for less than the U.S. Mint, or the primary distributors were buying the 2025s and had to buy them. They don't have a choice. They're buying them from the mint at 3.4% or whatever that number is, and selling backdates at 1.5% less than that a few months ago. So they were loaded with product and having to take on more, and so the premiums fell. They wanted to move it. And then all of a sudden, it's starting to disappear. And maybe part of the reason that's disappearing is that, let's look at silver. Right now, it's at all-time highs against the Canadian dollar, the Aussie dollar, the Japanese yen. And what's interesting, and the bald guy money called my attention to this, is that in 2011, the previous peak, silver barely almost got to 50 per second. The dollar then was at 75. Now it's at 107. So at a 107 right now, it's silver is doing what it's supposed to do as those currencies have fallen against the dollar. And it's at an all-time high. What happens if our U.S. dollar falls back to where it was in 2011, down to 75? You have no idea how high gold and silver will go in that environment. And certainly it could. I mean, inflation is here to stay. And when we get into this recessionary environment, what is the Fed going to do? Are they going to lower rates again and pivot and re-inject QE again and start to, just say to the world, we're trapped? Holding dollars right now is a losing proposition. And I've mentioned Luke Groman talks about net since 2014. There have been no new treasury purchases net by central banks. On a net basis, they've been selling treasuries to the tune of almost $700 billion while buying $800 or $900 billion, what they account for, a lot more that they don't, in gold, which is the only other tier one asset. So you got a lot of awareness around the country, around the world, not here yet, but because there has been over the past couple of weeks this renewed awareness by the metals crowd, it doesn't take a lot, to blow through inventory. Once you do that, now you're getting into just 2025s. There's no value there. There's no bargain there. I've been screaming to people for forever on your show that this is strange, the premiums and the availability. And I've been through this so many times, done again on lesser, it's never been as extreme. It would be like this, but now it's like this. My whole career, I've seen periods of time where, the mints in general are very inefficient. They're government, right? They don't have the profit motive, but they're the model of inefficiency typically.
Timing is everything. The silver breakout isn't just a question of if, it's a question of when. While no one can predict the exact day or hour, history has left behind clear signals that tell us when silver is about to make its parabolic move. And right now, those signals are flashing bright red. So what should we be watching for? The gold breakout. Silver follows gold, but with a delay. In every major bull run, gold moves first. Then silver plays catch-up in a violent, explosive fashion. Gold has already been climbing toward record highs, and once it breaks out past key resistance, silver's time will come. A collapse in confidence. When markets lose faith in central banks and fiat money, capital floods into hard assets. The moment we see widespread panic over bank failures, sovereign debt defaults, or runaway inflation, expect silver to start surging. Silver's technical breakout. The last major silver rallies began when silver broke past key resistance levels. Right now, $35 an ounce is the critical barrier. Once silver smashes through this wall, momentum could take it to $50, then $100, then much, much higher. A physical silver shortage. We're already seeing signs of this. Silver inventories on major exchanges are shrinking fast, and the U.S. Mint has openly admitted to a silver supply crisis. When retail investors and industrial buyers start competing for what's left, silver's price could spiral upward overnight. Massive institutional buying, the smart money always moves first. Hedge funds, billionaires, and sovereign wealth funds are already accumulating gold and silver quietly. By the time the public realizes what's happening, silver could be hundreds of dollars per ounce and climbing. These indicators aren't just theories. They've happened before. In 1980, in 2011, in 2020, every silver supercycle followed the same playbook. And this time, the conditions are even more extreme. Here's the bottom line. The breakout could happen at any moment. Once it starts, the window to buy at these artificially low prices will slam shut forever. Most people will only wake up to silver's true value after it's already too late. But for those who see the writing on the wall, this could be the biggest financial opportunity of our lifetime. And that brings us to the final question. What's the ultimate takeaway? What should people do next? It's time for the conclusion, the moment we've been building toward. Stay with me.
Interview with Ed Steer. Oil is down at the bottom in terms of short, and silver's way up here. It is the largest concentrated short position by a handful, 8 Western banks. Well, I guarantee you those same 8 banks have been doing the same thing in the LBMA, where they have a 300 million ounce float and trade 3 billion ounces a day. 10 times the float, 90+% naked. And that's the answer that I would give, is that it's been manipulated, not for gain. Maybe the bullion banks that mess with it figure, well, we're being told to do this, but we can make some money at the same time, but more so because the military-industrial complex has been running this country as President Biden was sitting on a beach. It wasn't him making the decisions to, Syria or any of the other things that we were doing, and bombing runs here and military there, and all the things that we were doing, he didn't have part of. But the military-industrial complex, I argue, did. And the billions and billions and billions in military aid we gave to the Ukraine. And it's very interesting. If you look at who owns all of the military companies, like Raytheon and General Dynamics and Boeing, and who do you think owns all that? Oh, that's BlackRock. And who do you think got all the contracts to rebuild the Ukraine, where all the money will be made? Well, guess what? That's BlackRock. And who do you think is now the primary custodian of SLV and GLD along with JP Morgan? Oh, that's BlackRock. So it's a whole lot deeper than people think, but these massive behemoth institutions have crossed the line from, being a corporate entity into, becoming more government than anything else. In my mind, that's why silver has been held back. But you could argue that there is a realization by countries and very powerful countries that aren't afraid to stand up to the COMEX. They aren't afraid to stand up to the LBMA or to the West for that matter. They understand what we've been doing, and they're beating us at our own game. It will happen. It will happen in a glorious, spectacular fashion. It will test your patience. But when it snaps, it will snap in a way that you finally will understand why you had such strong fingertips, that your intuition led you in the right direction. So I'm very confident of that. There's a 90% correlation through all of history. in the movements of gold and silver. They don't move in perfect harmony very often, and we've seen that with gold's run up. But often silver, as we've said before, will catch up and surpass gold before it's all said and done with the percentage gain. So final chapter hasn't been written on silver yet, but I understand it's frustrating, but it isn't a tier one asset backing a new system like gold. And that's the primary reason, I think.
The clock is ticking, and the silver market is on the verge of something historic. Every sign, every data point, every major financial shift is pointing in the same direction. Silver has been artificially suppressed, overlooked, and ignored for decades, but that era is coming to an end. The next phase isn't gradual, it's explosive. When silver moves, it moves fast. It doesn't give second chances. It doesn't wait for the mainstream to catch on. It rewards those who saw the storm coming and positioned themselves before the masses woke up. Right now, the world is sleepwalking into a financial reset. Confidence in fiat money is crumbling, inflation is devouring wealth, and governments are running out of options. The cracks are spreading, and history has shown that when the system breaks, capital flees to real, tangible assets. Gold will lead, but silver will run. It always does. And when the demand shock finally hits, silver's price will respond in a way that will leave most people stunned. The key isn't to wait for the headlines. By the time the media is talking about silver's rally, the biggest gains will already be gone. Those who act early, before the breakout, before the panic, are the ones who stand to benefit the most. But once silver starts its move, hesitation
No, it's a fair
will be
question.
costly.
It's a good question.
The market will move
Even though
too
it's
fast,
a monetary metal, gold
premiums will
is
soar,
the
and physical
monetary
silver
metal.
will
Gold is
vanish
the
from
tier one
shelves.
asset.
The
And
silver opportunity
you
is
know, you
sitting
can
in
see
plain
by the
sight.
central bank
But the choice is yours.
accumulation of silver
You can
that
wait and
they
watch
have
as
not
silver
forgotten
reclaims its
about
true
it, but
value.
it will not back
Or you
a
can be
system.
ahead
It
of the
will
crowd,
not be a
prepared for what's
bimetallic
coming.
system. But
The
silver is
biggest transfer
strategic.
of wealth in
And I
modern
think
history
silver
is underway.
is
Will you be on the right side of it?
has not kept pace with gold because silver is a far more important metal to the military-industrial complex and to the people who need it to make high-tech weaponry, is truly the way that I look at it. There's no reason, there's no logical, and you go back to the interview that you did with Ed Steer, and the first chart that he put up where he showed the largest concentrated short position in any commodity traded on COMEX was held by 8 Western banks. Why would 8 Western banks hold the largest short position in any commodity traded on COMEX? Why would they trade 3.5 times annual global mine supply, these same Western banks, largely on the LBMA, 90% paper short? Why put so much effort into holding down the price of silver is the question that needs to be asked, and then work backwards. It's not profit. There are many other things that they could do that would not be as risky as what they're doing. There is a bigger agenda with silver. So gold is the monetary metal, and silver is too. But silver, its plurality in demand is what sets silver apart from a value proposition. You have monetary demand, you have industrial demand, you have military industrial complex demand, and by now, if we can't tell how powerful these folks are, you know, the pushback for peace is ridiculous. The warmongering, the continuing, you know, they want NATO now. You want NATO to put boots on the ground, the UK and France in the Ukraine. Are you really that stupid? I mean, these folks just want perpetual war. Well, if that's really what you want, and you want to continue to make weaponry, you need cheap silver. And if the world really knew how valuable silver was and how scarce it would be a whole different value proposition. Some of the countries do. India, I would argue, does. And that's why they've imported, I don't know, I don't really know the number, north of 800, 900 million. And why would they do that if it was just a, you know, why is China, who's the second largest producer of silver in the world, going around buying Dorian concentrate if they're already producing it there from the miners in Peru and the rest of Latin America, disintermediating the marketplace? Why is Russia adding it? Why is Russia adding it to their strategic stockpile? These are all questions that they don't need to be answered. They need to be asked. And it's easy if you look at that and say, well, geez, what's Occam's razor? Occam's razor say because it's a whole hell of a lot more important than the price would lend one to believe. So I would not, I understand people being discouraged by it. It's been counterintuitive. But the bigger question is why? Why has there been such a massive effort by these massive banks to mess with silver? If you look at that chart that you put up during your...
Silver's time has come. The signs are all there: rising inflation, collapsing trust in fiat money, industrial demand surging beyond supply, and a global financial system that is shifting under our feet. History has shown us what happens next. When the masses finally wake up to silver's true value, the rush will be instant and irreversible. The reality is simple. Most people won't act until it's too late. They'll watch silver's price climb, convinced they still have time. But silver doesn't move in slow, predictable steps. It explodes. And by the time it breaks past old highs, the opportunity will be gone. The biggest rewards go to those who see the writing on the wall before the headlines confirm it. Right now, silver is still within reach, but that won't last. The moment fear grips the markets, the moment institutions and governments start scrambling for hard assets, the game will change forever. $50 silver will be a memory, $100 will be a milestone, and $5,000? That's not a fantasy, it's the logical outcome of a system in freefall. This is the time to pay attention. The biggest wealth shift in history is already underway. The only question left is, will you be ready for it? Subscribe now to stay ahead of the curve, because once silver makes its move, there will be no looking back. And remember, this is not financial advice. Do your own research and consult with a professional before making any financial decisions.